Yo, good morning, traders and investors. Today is Friday, February 10th, approximately 9 a.m. Eastern Standard Time. Quick update here on the Bitcoin. I just wanted to give all of my subscribers the latest. Everything is going exactly according to plan. If you've watched my previous videos, you know that I called this breakout based upon what the charts were telling me, and you know I have been calling a pullback. So we're going to review both of those scenarios, and we're going to talk about where we pull back to on the Bitcoin, and then where we could go from there. Of course, everything that I say in my chart, through my technical analysis, just because the charts show me that that is the most probable direction does not ever mean that it's going to go that way. And we know from history that it often has not. So, guys, don't hang on every word here. Just because we're batting 1,000 within the past several weeks / months does not mean that we could swing and miss at one of these predictions. All right, that being said, disclaimer out of the way, let's take a look at the dollar here, and you can see just like we wanted. We broke this macro uptrend, meaning the dollar is getting weaker. That break was recorded here. And then I stated in my videos, I want to see us come back and test that previous support as now resistance. We did this in the classic retest. And in fact, I made a static post and said tomorrow we're going to go down a bit or sideways. We did exactly that. All right, so this last week has been exactly what that post indicated. And I was just reading the charts here, guys. Looks like the dollar has performed its classic retest and now has the permission slip to continue downwards. Now, whether or not it will do that remains to be seen, of course. I think probably sideways to downish is most probable scenario. And maybe we just see a lot of sideways action here until we really see either a pivot or pivot language from the Fed. Onto the VIX here. The VIX has been moving up, and of course, I don't know what is driving up the VIX actually. I don't stay focused on news items. Maybe there's something going on with China again. Who knows? Maybe it's this balloon thing off the coast. I don't pay attention to a lot of headlines anymore. But there's something there that's driving the VIX up, something that is driving fear up. All right. And of course, it tends to correlate with the dollar. And we saw the dollar really move up 3 days in a row the previous week. And the VIX kind of followed suit here. A little bit lagging, but the last 3 days have really been big green candles for the VIX. All right, so we need to keep our eye on that because the VIX is kind of one of the predominant indicators here. If fear goes up, it's not good for the markets. So let's just take a look at our lead indicating index, which is the US 500, S&P 500. And you can see after our breakout of the macro downtrend, all right, so we had the breakout here, the macro downtrend. And I'm on log view right now. Hang on a second, guys. Sorry about that. Breakout here of the macro downtrend, breakout of the macro uptrend. And then we want a classic retest. And we are getting that retest right here. It's possible that we break down below that macro uptrend as well and get another retest, or get a retest of our macro downtrend as well on the S&P 500, which interestingly, oh boy, I can't talk, it's too early. Interestingly enough, intersects with the 200-day moving average. All right, great area of confluence there to see a bounce if we do break through and below this macro uptrend and continue down. I don't know whether that's going to happen or not. I'm just saying that is something to put on your charts and watch for. All right, now on to Bitcoin. This is really what I want to talk about most, because I have been encouraging all of my subscribers not to have FOMO, to be careful here on these bull moves, especially when you see the RSI in a state of being overbought for a period of, man, that lasted like 3 weeks there. All right, and now, and what I've been telling everybody is you really want to wait for that RSI to come back down into reasonable territory. We are now there, guys. We're now in reasonable territory to, if you believe this is a bull breakout, as I'm starting to slowly but carefully being convinced of. I hesitate to say bull breakout, because this has really been a surprisingly nasty and quick downward bear market over the past year. And then every time we think we're just getting out of the woods, something else happens. And most recent news, I guess, I've seen headlines pop up that the SEC and Gary Gensler they're aiming for staking cryptos. In other words, they want to make the process of staking altcoins illegal. All right, so that is, creates more FUD in the market, and could, provided any of these headlines gain traction, take us down even further. All right, but I have been calling for a little bit of pullback here. In fact, what I've been calling for is us to come and retest that 200-day moving average, which intersects and correlates with some very significant trend lines and supports, levels and supports. So we have a big old area of confluence really right in this area. With our 200-day moving average, we have this ascending trend line from June 2022, and a major level of support there that goes all the way back to December of 21, around 19,800. In fact, we could take that one all the way back to 2018 as well, I'm sure. I'm not going to do that right now for sake of time, but those are significant areas we need to watch. And you guys can see the 50-day is crossing above the 200 daily moving average here, forming a golden cross, a very positive sign. But I still do think we come back down and even do a little bit more retesting. It might not happen. That's why I say start to DCA in here at these levels with the RSI in reasonable territory. Once again, this is where you want to dollar cost average in on Bitcoin, on Ethereum. Bitcoin, I review Bitcoin because it is our lead dog, and what Bitcoin does, the remaining markets will follow suit and do. And so this is what you want to watch first. And if you're thinking about DCAing into some of these altcoins, this is the time to start looking at those charts and making sure that they're following pattern, and get yourself vested in those. All right. So while we are forming a golden cross here on the daily, I want to show you something that's happening on the weekly, and I'm going to have to jump to another chart here. All right, this is kind of noisy. Ignore all these breakouts. These occurred on a logarithmic time frame, but I'm taking us out of log mode here, And I want to show you, it's going to get a little bit noisy here. Just ignore all the breakout things. Those are not significant right now. You can see the 50-week moving average is coming down and intersecting with this 200-week moving average. Now, here's why on a technical basis we did not continue up. Look at this, guys. We came right into that 200-week moving average, and you can see the 50-week is pressing us down. The weekly moving averages here are forming a death cross. That is a very bearish indicator. So we're getting mixed signals, and this is the first time in Bitcoin history that we have formed a death cross on the weekly. But it's not surprising at all that we've got this pullback, considering this huge area of confluence here just pressing us down. And so I do think we will continue back down to 21,000 area before we make another attempt to get over this 200-week moving average. All right, this is interesting from a historical standpoint, this price action, because this, like I said, death cross has never been formed, and we really haven't remained under the 200-week moving average as long as we have this past period. So it's going to take a little bit for us, if this is truly a bull run, to manage enough momentum to get back over to the top side of this 200-week moving average. All right, one more thing I wanted to show you here on the on my other chart, and we'll go back to the daily. And again, it's going to be there's going to be a little bit of noise here once I get back into the daily. But I want to show you. All right, so we've got this cup and handle pattern mapped out, right? And I said, based upon this, it's possible that we go to 30,000. All right, we broke the neck here, and the measurement is taken from the neckline to the bottom of the cup. All right, and then we place it where we break out, and that gives us an approximate target of around 27,000. All right, but if we're up that high, I see no reason. There's no resistance there. There's a few smaller resistance levels, but nothing major that would tell me that we're not just going to go all the way up to our next major resistance level, which is around 30,000. All right, so if we break this neckline, which we have, we're not coming back to retest it. Possibly we dip below quickly and hit that 200-day moving average. It is possible, but the neckline right here is the most probable area of retest. Again, look at this RSI. This is where you start to dollar cost average back in if you are going for these longer swing trades, as I am. All right. Now I'm still holding my crypto from way back here, and am in the green slightly. You ask why I'm not taking profits? Well, because my expectation on this cup and handle pattern, which will take weeks to play out, is that we go to 30,000. At that point is where I would start to consider selling. But I want to show you one more thing here. It is possible that this cup and handle pattern is we're actually forming yet another larger cup and handle pattern. If I take this cup here all the way to where we last hit that 24,000. All right, let's do that. Over here as well, bring this up. All right, we hit the 24,000 there. Now pull this the bottom of this cup down here, and now we'll take this handle pattern and move it. It's possible that we could be forming a larger cup and handle pattern here with this most recent pullback. All right, I don't know where this handle goes, but again, that would make sense technically, that we pull back 1/3. Typically it's the handle, a true perfect technical cup and handle, 1/3 the depth of the cup the handle is. All right, so retesting this neckline would make perfect sense, and would form a perfect cup and handle pattern. At which point, let's see where we go if this ends up being true. All right, we're going to measure from the neckline of that cup. We're going to measure the depth of that cup to the bottom of the cup. Then we'll take this measurement and move it over to where we approximate a breakout. And look at this, guys. We're going all the way to 36,000, which is our next major ascending trend line, this brown trend line here, which comes all the way back from, wow, this goes back a long ways. And that's why I still have it drawn in there. All right. This goes back to our coronavirus panic of March of 2020. All right. And we used this for support for so many moons, and then broke below it here with the Luna fiasco. And now it looks like if this larger cup and handle pattern that I just drew and I see possibly forming, if it plays out and we break this neckline here, which is 24,200, then it looks like we will go to test the underside of that ascending trend line with a classic retest of previous support, now becoming resistance. Again, this is not something that will just pass right through. This is something that we hit our heads on, and then kind of probably come back down and retest this major support area in here at 30,000 if this plays out. All right. So these are all things to put on your radar, be aware of. It looks like so far we're doing really good with these analyses. From a technical perspective, the charts are playing out most probabilistically. Boy, I'm just having a really hard time forming my words and sentences at this time in the morning. Maybe not enough coffee. Anyways, guys, that's what I wanted you to be aware of. If this information is helpful for you, would you let me know that in the comments, or give me a like or subscribe? These are helpful actions that you can take to promote the content that you feel I provide and is valuable to you. It's a way to help me distinguish between content that's not as valuable as content that you feel is more valuable. All right. And that would be much appreciated. Until the next video, guys, peace, y'all.